As you visit traditional banks and try to sell the services and capabilities of Jumo, what are the challenges or the pushback you get? Because you're being invited in because people are interested in what you do. But once they hear about the stipulations, what they have to accept or what they should accept to get success, what's the hesitation from the traditional financial institution, and what gets in the way of that partnership working?
That's a brilliant question. Where do I start? There's so many challenges. I think one of the biggest things is talking past each other when it comes to what the ultimate goal of each party is. So for example, and I'm biased to using Africa as reference,
right,
a number of the traditional banks welcome fintechs in the name or with the theme that we want to promote financial inclusion. However, you have to read between the lines to understand that, yes, they do have that altruistic intention. However, in order for this to be something that they're going to be able to continue to sustain, it has to make profit.
Right.
So if you are thinking, oh, this person just wants to provide eligibility to a number of people who were outside the financial service, and you don't zone in on the fact that, well, they want to provide eligibility and include as many people as possible, but they also need to go back to their board and show them that this is profitable and hence it's sustainable. We won't keep coming back to you to ask for money.
It's not a charity.
It's not a charity. So they might say we're not for profits, but they're actually not for loss either. So you have to understand that. The second thing is just getting them to understand. Just getting them to understand the technology, just getting them to understand that this consumer has to be served differently. Sometimes they come in with expectations that you're going to start preaching about machine learning and deep learning and alternate credit models that are doing, backflips in the air. But you tell them something as simple as what you just made reference to, that, well, we're delivering this service using USSD. Now, USSD is a 50-year-old platform, but that's on what M-Pesa has been built. The simplicity, the ubiquity, the ease of use, the less friction. A customer or consumer does not need someone to stand and help them navigate when they have to just type *170# to access a financial service. So you tell them, well, this entire platform is predicated on USSD, and it's almost like, oh, that's too simple. Are you sure it can do what you're saying it can do? But the back end is where all the magic happens. And getting the bankers to understand these kind of dynamics becomes difficult because in their mind, they're used to branch, brick and mortar, traditional credit scoring models, the 6 C's of credit. And now you're bringing in alternate ways of doing things. You're talking about the digital footprint. It's really about managing the expectations. And then the aspect comes in of them always worried that you're about to usurp or take over their market base, right? So it's almost like we're partnering with you, but we are keeping an eye out for you as well.
There's no trust.
There's no trust.
But at the stage I'm talking about, you're just dating anyway. So it takes time to establish that trust.
Exactly. And they have lost an element of trust that they used to have because of all the things that have happened in the financial services sector. So you're coming in and you're trying to, and it's a very delicate balancing act when you're trying to manage those kind of partnerships. And apart from just providing the technology, you now have to manage the relationship because in Jumo's unique case, we're not only partnered with a bank, you're partnered with a mobile network operator. Now, these are two huge mammoths of companies that have their own ego and they have their own goals. The bank is looking to make profit. The telco is looking to bring on board as many customers as possible, make these customers sticky. Now, you are the tiny fintech in the middle that is having to manage the relationship between these two parties and find that sweet spot where their strategies and their goals align, right? And you have to display that your technology actually works and can do what they're asking for.
At scale.
At scale.
Yeah.
Before they begin to ease up and begin to understand that this collaboration actually can bring value, not only to the consumer, but to all parties involved.
So along the same line, a fintech's operating model is speed, simplicity, and iterative innovations where everything's very quick. When you then partner with a more legacy firm, they're not in that legacy environment have anywhere near the speed of innovation. They don't look at incremental innovation in most instances. I'm making a broad brush here. How do you bring them along so that they don't slow you down? Because your speed is a lot of your value proposition.
Exactly. So it's a challenge that you really have to think through in order to come up with a solution. Using Jumo as a use case, we identify that one of the reasons why traditional banks were not going into this market of the unbanked population is simply because their platforms were not built to sustain or carry the kind of transactions that millions, potentially 1 billion customers would be doing. And these are tiny amounts, large transactions. So we basically said, you don't need to use your platform. We have built a fully next-gen end-to-end banking platform that is flexible, that is scalable, that is based on the cloud, that allows us to be able to handle all of these transactions for you, so you can focus on what you do at the core, and then we will handle all of this operational backend that you don't want to handle. Right? Once they see it in practice and they see that, oh, these guys can actually do it, they don't want to go and explore how AI can increase their efficiency and all of that. But we will do that quickly and come and say, these are the results. Yeah. So then they get the confidence, because we've basically been the experimentation bed or the nursery for all of these things that they don't want to go into. It's only that in that manner, or using that approach, that you're able to get that buy-in and that confidence, that they come to the table and they recognize that let's not clip their wings, let's allow them to flourish, because at the end of the day, we see the results. It's easier said than done, and it does take a lot of time, and it does take a lot of relationship management in order to build that trust. But eventually, once the results begin to show, right? For example, in tough economic times when everyone is going through it, if they can see that, oh, these guys are able to keep their costs low, they're able to continue scaling despite the fact that winter is coming. Yeah. Right. The fact that winter is here, then you begin to see that the partnership is beginning to work, and then the confidence builds, and then they allow you the flexibility to grow.
So one thing I talk about in this podcast quite a bit is the importance of the right leadership to allow change to happen. As you're trying to knock on doors of financial institutions and core providers on selling Jumo, how quickly can you usually tell whether or not this is going to be an easy implementation or a tough implementation, just because of the leadership? Because a lot of times everybody says the right things, but most organizations have gotten to the point where they know what questions to ask to say, these people have not done the basics. I mean, is this something you can sense really quickly?
So personally, because I've been in the partnership space for quite a while, it's easier for me to ask the kind of questions that lets me gauge the kind of leader I'm speaking to, right? In my presentation, I spoke about being curious, not judgmental. As soon as you start speaking to a leader, be it of a financial institution or a mobile network operator or a payment system, and you begin to see that there is this wall of judgment, rather than asking the curious questions to know if it aligns with what you're trying to achieve or not. I've had a leader ask me, I could tell that he didn't fully understand what Fintech at its core was. He assumed we were what is called a savings and loans association that had gotten a technology platform. But he wasn't directly asking the question.
Right.
He was basically trying to negate what you're trying to say you can do. Now, right off the bat, you can see that you're not going to make a lot of progress with this person, because one, they're not being open-minded enough to understand what you're presenting before them. Two, they're not communicating their strategy and what they're trying to achieve. They're really being shielded about what we need you to come and help us with. So you can tell that this person is still thinking that we are in competition with each other, and it's not at the point where he recognizes that we can collaborate. But then other cases, you also do have people who are super excited right off the bat. They want everything and a bag of chips. And it's up to you to be able to settle them down, to let them know what's realistic and what's not. Because if you overpromise and it comes down to what the delivery is, and they're not able to go back to their board and say, we're able to deliver this even though we asked you for $1 billion, then that partnership is going nowhere. So it's sort of a balancing act in trying to identify these personalities, as well as being able to sell the technology and the promise of the future in such a way that they do get excited about it, but within realistic context.
Yeah.